There is still an economic crisis going on around the world with inflation, cost of living, and energy crisis. And this year still look like another difficult year for investors. So, what are the challenges that remain and how investors should adapt to the uncertainty of the global economic environment? Today, we are going to talk to Mr. Patrick O'Donnell, Investment Director of Aberdeen Global. Hello, Mr. Patrick, and thank you for coming today. We are in the early year of 2023. What different investing environment do you see if compared with last year?
Well, last year what we saw was there was very coordinated monetary policy tightening across the globe. The most aggressive tightening we've seen in quite a number of years, and that really saw all financial assets performing very, very poorly in unison. This year, I think there's probably going to be more dispersion amongst asset classes and amongst different jurisdictions as well. So it should be an interesting year. We can see the US Federal Reserve, for example, they're slowing the pace of rate hikes, whereas other jurisdictions are remaining more more hawkish and promising more aggressive rate hikes. But I think the economic dispersion is going to be prevalent as well.
Okay.
And that should be pretty interesting for fixed income, and at times it can be interesting for equity markets as well.
Okay, and inflation still a major concern this year?
Yes, I think so. We've seen it appears that
slow down a little bit.
Sorry. Yes, I think so. Inflation it appears to have peaked in certain areas of the globe, but the numbers are still very, very high. So whilst there's hope for consumers and investors, some investors, that inflation will continue to come down. I think it'll be easy to come down another couple of percentage points just because of base effects from the aggressive rise we saw last year. But it probably won't go down to not in the very near term to the levels that we were used to before the pandemic.
Okay, so maybe the national banks around the world, they would not raise their interest rate as aggressive as last year.
Correct. We don't expect that to happen. There's in many DM economies who are slower to react than some emerging market economies. They still seem to be guiding the market to being less aggressive, which I think that they can continue to do that because headline inflation appears to be trending lower, and then that's true in some EM economies as well, or developing market economies as well, where you can see really attractive real return.
Okay, and the cost of living is also another major concern because as cost of living rise, people have a difficult time. Regular people, they have a difficult time trying to put food on the table, and thus they have less valuable dollars to invest in the future. So do you think that cost of living also slow down the global investment?
Yeah, I think the consumption or the consumers have less disposable income across the whole demographic, and unfortunately, whilst we think that inflation is going to be reducing, or the rate of price increases is going to be reducing this year, it doesn't mean the price level is going to be reducing, so it's still going to be a challenge for consumers. It's also going to be a challenge for investors as well. And there's less capital to move around. But what I would say is that normally the part of the electorate that has disposable income to invest in markets, they're less impacted by. They're still impacted, but less impacted than the lower cohort, with less money to invest. So there's still plenty of money to invest in financial markets.
And for investor, what do you think is a good investment strategy this year?
I think trying to have a diversified portfolio. In recent years it has been more difficult because there have been certain themes that have been driving markets, and all markets have been moving in unison. So it's been very difficult to have a diversified portfolio. But now with dispersion amongst jurisdictions and asset classes, it should be easier to come up with a diversified portfolio.
Okay, and last year was quite a difficult year for investors around the world. Do you see any positive sign that happening this year?
Well, correct. It was a very turbulent time for crypto assets last year. What we've seen is that in the previous years, in 2020 and 2021, when there were huge liquidity injections from all central banks around the world, particularly in the developed market, you see crypto assets do very, very well. And when central banks withdraw that liquidity or inject less liquidity, then we see crypto assets fall. Our projection is, our forecast is that liquidity withdrawal will still continue in 2023. So it'll still be a challenging year for these assets that are more dominated by liquid flows, or when liquidity is abundant in financial markets.
And a lot of people used to consider cryptocurrency as a good alternative investment. But for yourself, what is considered a good alternative investment?
It's a good question. I think for myself, I tend to invest in the more liquid end of the spectrum in developed market rates and foreign exchange. But what I would say about alternative investments, they tend to be less liquid and more privately held assets, not publicly listed assets. So it's very difficult for retail investors to do their own research and their own analysis. So it's probably better for them to speak to parties or professionals that can do the research for them and invest on their behalf.
Okay, but the traditional investment like stock and real estate still yield a high return and consider a safe investment strategy?
I think the starting point probably matters for things like fixed income. It's been a very challenging year, or the last couple of years have been very challenging. But now the starting point is that you've got pretty high nominal rates, and in some jurisdictions you've got pretty high real rates as well. And you don't have to take a lot of duration risk. So there are attractive rates of return on offer, particularly if you have the view like we do, that inflation is going to be falling, at least for the near term. Equities, I think it's a bit more challenging, or it's a bit more uncertain, because it depends on how the global economic cycle how that develops in the coming months, whether there's a recession, and it probably depends on which economies or markets you're looking at. It's more specific.
And do you see the different in opportunity in different part of the world, whether it's in United States, in Europe, or in Asia, if there are different in risks and opportunity in investing?
Well, I think at the moment you've got in the US, for example, you've got very pretty high nominal rates at the front end of the curve. So I think 4.5 to 5% yield in US dollars is pretty attractive for limited risk. I'd say, given that that's the global risk-free rate. Of course, it depends on what currency you're investing from. There is currency risk there. And in China, at the moment, there's a reopening story, so there's a positive narrative there, and that's also feeding into Europe as well, which has got very significant trade links with China as well. So, but I think it'll be a very interesting year as these themes develop that we've been talking about.
Okay. And in the time of economic uncertainty like this, where there is inflation, massive layoff everywhere, it is said that it is best to keep cash with you as many as possible. Would you agree with this?
Well, I think having cash-like assets, I think so. Short duration products, I think, are worthwhile and can be useful, because if you can, in years gone by, you had very, very low rates of return for holding your cash in short duration financial assets, whereas now it's actually quite attractive. You're paid to have to give you money to more than overnight, whereas before it used to cost you money to even hold it in a current account. So I think cash-like products are interesting here at the moment if you're risk averse.
And you are an investor yourself.
Yeah.
Can you tell us a little bit about your daily routine? Like, what are the full-time investors do every day?
Well, a lot of the themes that we look at on a global macro investor. So a lot of the things that I look at are slow moving in nature. So it's you process the incoming information. So I'm based in London. So what's happened in Asia overnight? How does that influence my portfolio? Do I need to take any action? Are there any new opportunities? And then it's really seeing how the incoming data in the European session and the US session, how does that impact the portfolio that I invest on behalf of my clients.
So you spend a lot of time observing the market and studying all these data.
Yeah, and communicating with other market participants as well, I think. So we do a lot of reading and research ourselves. We've got a big research team in-house, and we've got lots of different investors that invest in other asset classes. So we speak amongst ourselves quite a lot to see if there's something interesting that other investors haven't seen, and whether that can drive price action in other asset classes. So we've got a strong communication culture at our firm, and that's what we hope gives us a more informational edge in order to make better investments for our clients.
Interesting, because the reason I ask this, the younger generation of investor, they tend to think that full-time investor is an easy way to make money, and that they maybe get rich quick, but that is not the case.
No, I don't think so. You can be. Some people can clearly be very lucky when there's a mania or a lot of excitement around a particular asset class, like we've seen with some meme stocks in the US not that long ago, and in cryptocurrencies. But I think there's been some examples of fraud in crypto. There's been some big failures as well. So I think there's quite a lot of uncertainty with the crypto in particular as an asset class, because by its very, very design, it's unregulated. So it's very difficult, I think, for amateur investors or even professional investors to. I think there's no guarantee that there's going to be quick gains, that those quick gains yesterday are going to be available tomorrow.
And lastly, do you have any advice or suggestion to people who wanted to start it to come to their investment journey?
Well, I think what I've learned over the years that there's no it's not easy. So and there's no if it looks too good to be true, then it probably is. So you have to do a lot of hard work and a lot of research, or you can outsource your researching to investment managers that are paid to do that for you.
Okay. Thank you very much, Mr. O'Donnell, for coming to our show. Thank you.
Thank you.
And that's all for Voice of the Nation. Thank you for staying with us.